Welcome, everybody, to our Tactical Tuesday this week. We have an actually tough topic, I'm going to say, this week. Something that is maybe a little bit more difficult to talk about, that we're not used to talking about. And there's a lot of investors that have been maybe investing in things that are a little more risky. Let's put it that way. We've heard of some losses. We've heard of some bankruptcies. We've heard of lots of money, millions of dollars in some cases, being lost in our investment world. And it's actually starting to scare some people away. Some people are getting, what should I do? And so we're going to talk about that tonight. We're going to talk about three main points that we see that are kind of common denominators, common indicators as to whether an investment might go sideways. What things can we look out for? What things can we be aware of before we make that investment? We need to be doing a little bit of research when it comes to our money. And of course, if we are handling other people's money as well. So that's our topic tonight, guys. Investment loss, but not only that, how to move forward, how to make sure that our losses are kept to a minimum if possible, and make sure that, we're not stopping. This is Taking Action April. We're wanting every one of you to be taking action in some way, in a positive way, to be increasing your portfolio, increasing your investments. So what things can we learn from what's been happening over the last number of months, over the last year or so, as our investment climate changes? We're going to talk about that over the next few minutes. Let's get started.
Hey guys, it's Corey and Tiffany, and we're the co-founders of Investor Life.
And we help investors scale their portfolios using other people's money. Fearless, welcome to another Tactical Tuesday.
Welcome to another Tactical Tuesday. We have a really cool topic that we're going to be talking about tonight. This, guys, I hope is a scenario that shows you the power of leveraging your money.
We help investors take their portfolios from 2 or 3, 5 properties maybe, up to 15, 20, 50 properties if that's what they're wanting to.
Really, the sky's the limit. And we help investors scale their portfolio.
For our free weekly live trainings that we do over there on Facebook. Thanks for...
Hey guys, it's Corey from Investor Life, and Tiffany just stuck out her tongue at me. Okay.
Okay, that was a bad rendition. But guys, today, what wrecked people in real estate? We're going to be talking about that, and we're going to make sure that it doesn't happen to you.
Welcome back, everybody. Let's get started. Let's get into this topic. And thank you, first of all, for those that have commented, letting us know that you're here, where you're from. Really appreciate that. So, as we start most of our broadcasts, just kind of saying hi to everybody across the country. So Fritzy in Regina, Jules in Spruce Grove, Urshad from Ontario. I believe that's probably Sean from St. Albert. Chris, we got people from all over the place here, guys. Halifax, Edmonton, you name it. So welcome everybody to our show tonight. And, their topic is a little bit touchy. Topic has affected a lot of people recently. You might have been seeing it on Facebook. You might have been hearing about it in the news. There's news articles about these sorts of things that are happening right now. There's large investment companies that are declaring bankruptcy. There's, maybe people in our investor world that, we put a lot of trust in, and they're declaring bankruptcy. These types of losses are affecting a lot of people, even here within our Fearless community, some that have invested. And so there's a few things that we're going to talk about tonight, because these are, what we would say tough times when it comes to being an investor. And I'll say this to begin with, guys, is this isn't the first time we've seen this. Okay, so this isn't the first time that there's been tough times in the real estate investing world, or that there have been prominent investors that have had to leave the industry, or that there have been cases of fraud, or there have been cases of large companies that simply didn't give the returns that they were promising. So these aren't things that are happening for the first time. These have been happening throughout history. They've happened in the ups and in the downs of lots of different real estate markets here within Canada. So this is, unfortunately, this can be a relatively normal thing that happens. But when a whole bunch of these things, we start hearing about it all at the same time, what that starts to create is a little bit of fear. So for you guys that are listening, I just want you to throw it in the chat. Have you been hearing these things? Am I just hearing them because, we hear a lot of inside information, or is this stuff that you guys have been hearing too? Is it something that concerns you? Let us know. Put it in the chat. Okay. Yes, Sharon, it is a great topic. It's one that we need to talk about. It might be a little bit tough to talk about. But there's certain things that we can do as investors to make sure that we are protecting ourselves, or protecting our loved ones, or protecting those that we recommend investments to. There's certain things that we can do and certain things that we can watch out for. And another thing I'm going to say is that a lot of the things that we're hearing about are things that are tied in with real estate investing, although they don't have a whole lot to do with the real estate investing. And so we're going to touch on that a little bit tonight too. So 3 different points that we're going to discuss. Okay. And the reason for that is because when all of these things happen, what happens? We start to maybe doubt the strategies that we've been employing. We start to doubt whether we even want to be in real estate investment. Maybe we got hooked up with the wrong circles. We don't want to be scammed. None of these things do we want to happen, right? And it creates that doubt in our minds. It creates that fear. And so we want to tackle a little bit of that tonight, because these are real things. I've heard personally of certain people that have lost hundreds of thousands of dollars recently because they invested where maybe they shouldn't have invested, or certain things have gone sideways in their investments. And as much as we're going to say, there's certain things we can do to guard ourselves, even the smartest investors out there have lost money. Okay. So I want you guys to know that even if you cross all the T's and dot all the I's and you do all the research necessary, it is still possible for things to go down. And that goes with any investment that we're talking about. So whether that's real estate, or whether that is investing in a company that invests in real estate, or whether that is investing in a stock or cryptocurrency, or whatever type of investment we might want, we all know that there's risks involved in those investments, right? And so any one of those things that we're talking about, anything that we invest money into, we have an opportunity. There is an opportunity for us to lose that money. There is an opportunity for us to not get the gains that we were hoping we would realize. And that's across the board. It doesn't matter what type of investment we put it in. Some people left their money in 2008 in some banks, just left their money in a bank making virtually no interest in the United States. And those banks went out of business. So, is it possible to lose money? Absolutely. And so sometimes we really kick ourselves for making bad decisions when, at least we made a decision. At least we did something. Did we make a good decision? We might have made a good decision. We might have done the research and still things went sideways. So there always is that possibility. So don't kick yourself if you have gotten yourself into a bit of a pickle at times. What we need to focus on then is what to do next. Do we just drop everything and say, forget it, and that's it? And I'm out and I'm not doing this anymore. I'm not investing my money. I'm going to put it under my sofa and that's what I'm going to do. Well, hopefully by the end of our training tonight, you'll have a few other ideas, because just because we've gone through hard times, or because we've lost money in an investment, or we know people that have, that shouldn't scare us away from still making good decisions, right? This isn't the first time people have lost money in the investing world. All right. So we need to put everything in perspective sometimes. And that's one of the first points that I wanted to bring out. So here's the thing, guys. We're going to talk about some common indicators that we kind of see as a normal thread when things go sideways. What things should we be keeping our eyes out for? Okay. I'm just going to look at the chat here. So Sharon, yes, I've been hearing and over a month ago from out-of-town relatives whose city was negatively affected. Okay. Urshad, very busy with work. What's really happening in the market? Ignorance is blessing sometime. Yeah, absolutely, Urshad. Sometimes when we don't hear about, some of these major companies going bankrupt or well-known investors not being able to return the funds, ignorance is a blessing sometimes, Urshad. I would agree with you. One of our Facebook users, I'm not sure, says still good humans out there with great opportunities. And that is absolutely true. And I agree with that. There are still some really good opportunities out there. And so here's the deal, guys. I'm just going to bring this up so I can see everybody's name. That was Andrea saying there's still some good opportunities out there. And that is totally true. And hello, Sam. Good to have you here. What are some common denominators, guys? And here's the first point that I wanted to discuss tonight. Number one, is the investment that you're going to make. So let's say we're getting into private lending or we're investing into something where we have money and we want to invest it somewhere. Here's a question. Is the investment in a piece of real estate? Or is the investment into a company? Okay, there's a big difference. Is the investment into real estate, a piece of property, or is the investment into a company? Now, here's the thing. We can invest into a company many different ways. Okay, so, excuse me. We can have a company that sells hamburgers. Okay, let's say our company is McDonald's. When we are an investor and we're investing in McDonald's, let's say we buy some McDonald's stock. What are we buying? Are we buying hamburgers? No. Are we buying the buildings that McDonald's owns? Not really. We're buying into that company and we're buying into how well that company performs, whether they meet their expectations or not. That's what determines whether the stock goes up or whether the stock goes down. Well, the same thing happens if we're investing into a company that is buying real estate. Is that company's going to meet their expectations? Are they going to realize their expectations? Are they going to be able to pay out based on what their expectations were? We have to look at it the same way, except sometimes some of these companies that we might invest in are fairly small. Maybe only have a few investments, maybe just getting started, maybe been around a long time. Do we do our research properly on these companies? Now, what's the difference between investing in a company that is going to buy real estate and actually buying a piece of real estate? Well, if we buy a piece of real estate, guys, we still have a solid asset. Even if the value goes up, the value goes down, our rent goes up, our rent goes down. Very, very rarely are we going to lose 100% of our investment, right? Even if that property burns down to the ground, assuming we have insurance, we're still covered. Okay, so it's very difficult to lose 100% of your investment if you're buying property. Now, what's the difference? We now go to the other side and we're investing into a company that is buying property or says they're buying property. Are they really buying property? How confident are we in them buying that property? How confident are we that they're going to meet their expectations? What is their strategy for meeting those expectations? These are some of the things that we need to know and understand before we invest in that company. Does that make sense? You see the difference between investing into a company that is maybe investing in real estate. And that's what a lot of our private lending is doing these days. Okay, our promissory notes, our lending agreements, maybe our GSAs that we're getting involved in, all of these sorts of things, our limited partnerships, whatever it might be, we're investing into a company that is supposed to meet expectations. The other side is investing in real estate. So when we're investing our money, we want to maybe do a mix of both. We want to think about where we're putting all of our money. Because what can happen is a company can disappear. A company can disappear with the money. A company cannot meet expectations. And our investment can go to zero. Now, the reason that these companies raise money, and it's normal, I'm not saying this is a bad thing, guys, okay? The reason people raise money is to be able to meet those expectations that they're planning on doing. And sometimes they need to get private lending to be able to do that. But what kind of research are we doing in the people that we invest in? That's what it comes down to, guys. What kind of research are we doing? How confident are we that they're going to meet their expectations? There's a big difference whether we invest in something that can disappear 100%. You know, if I invest, let's say, in Bitcoin right now, can it go down in value very quickly? Yes. Can it go up in value very quickly? Yes. Am I going to put every penny I have right now into something like that type of investment? Probably not a smart thing to do. Could it pay off? Absolutely. Could I potentially lose everything? Absolutely. So this is where we have to determine the risk that we're willing to take. We have to be a responsible investor in determining, okay, if somebody is promising me 20 or 25 or 30% returns, is that realistic? Are they going to be able to do it? And if they're promising returns that are significantly high, why is that? Does that mean that the risk is high? Usually it does, guys. The higher the percentage you're going to make, the higher chance you have to make money on your money, the higher risk you're going to have that goes along with that as well. So when you're making your investment decisions, what do you think is smarter? Putting it somewhere solid in a company that has a solid track record, that has maybe been around a long time, and the returns are promised are less, or the opposite, somebody who's maybe not been through a downturn yet, always realized good numbers because of the market they've been in, and it's always gone up. They've never seen it gone down yet. But they're promising fantastic numbers because that's what they've always gotten. They haven't been around long enough to see things go sideways. Where would you put your money? This is a tough decision because sometimes high numbers attract us, right? It's normal. The higher investment opportunity that we get, the higher returns that we're going to possibly see, we easily get attracted to that. And we think, well, hopefully it'll just work out this one time. But are we putting in maybe our last life savings into it? Or is this money that we can play with? That's the decision that we need to make. The higher the risk, the less we should be putting in of money that really matters to us. So the first point we wanted to talk about tonight is, where is your money invested? Is it invested in solid piece of real estate that you are on title for, that you actually own a piece of, that can't disappear, that you can leverage? Leverage meaning you're putting a small amount down and a bank is putting the vast majority of it down. Your money then becomes leveraged. You have somebody paying down that financing, a tenant, and you're cash flowing on a monthly basis because you bought the right property. Very much more difficult to go sideways in that scenario than if you're investing with a company that is promising dramatic returns. I've heard from a few investors, and this is one of the reasons that I wanted to bring this up today, guys, is I've heard from a few investors recently that have heard about some of the news stories of people being bitten, let's say, when it comes to their investments, maybe losing significant amounts of money. And they've said, you know, I don't want to do this anymore. I don't want to get into joint venturing. I don't want to be a real estate investor anymore. I don't think I can handle this. And what I wanted to clarify with this first point here, guys, is there's a difference between being a real estate investor and investing in real estate and investing in a company that also invests in real estate. Okay, there is a difference. And if we are going to invest in a company that invests in real estate, and we're going to be a private lender, and we are going to make an interest rate on our money, That's all fine. But this is going to lead us into point number 2 and 3 that we need to consider when it comes to investing and putting that money with that company. Remember, any company can disappear. Any company can go into bankruptcy. Any company can be dissolved, and that money can disappear. So point number 2, if we are then going to invest in a private lending scenario where it's an investor or it's a company that we're investing in, here's a question I want you to ask. How long have they been in business? Now, here's the key, and this is a very important question. Somebody might have been a real estate investor for the last 5 years and been very successful. They've invested in a market that has always gone up in value. They have then become an expert. How many of those have we seen recently? How long has that company been in business? How long has that investor been investing in real estate? Here's the question. Have they gone through ups and downs in their market? Another comment I've heard quite a bit recently from several investors is that a lot of the people that are having trouble, they have never seen a down market yet. They've always been investing as things go up. They've always been investing when interest rates were low. Guys, back in 2004, when we got started, our first mortgage was 6.7%, and that was an absolute steal. That was cheap, cheap, cheap. Of course, we know where interest rates went from there, virtually down to nothing. I think the lowest we had was 0.5%, like under 1% on some of our mortgages at some point. That's how cheap money got. But now that we're back up to, I don't know what prime is, 7 point something now, 7.2, something like that. This is putting a lot of investors into really hot water. Why? Because number one, they didn't plan on it. Number two, their markets aren't appreciating like they might have planned on them appreciating. And especially if somebody is doing active real estate investing, in other words, maybe buying a property, renovating it, expecting a certain refinance number because markets are increasing as well, or trying to sell it and maybe flip it, expecting a sale number because markets are always, selling super hot, super fast. The carrying costs for those secondary mortgages are going to be lower because they can sell it so fast. Well, what happens now when they can't sell it? What happens now when they have to hold that property now for 4, 5, 6 years maybe? Can they still continue to pay that secondary financing? What's going to be their plan B? What's going to be their plan C? What's going to be their plan D? If you're putting tens of thousands or hundreds of thousands of dollars into an investment, guys, be very clear on what the strategy of that company is going to be. Be very clear, and have they seen things go sideways before? What lessons have they learned when they've seen things go sideways before? Because those lessons are imperative to whether or not that company is going to last long enough for you to see your returns. Does that make sense? Do you see what I'm saying? Throw it in the chat here, guys. I know it's gone a little bit quiet, but throw it in the chat here and give me some feedback. Let me know if this is making sense. Urshad says, one thing I've learned in life, diversification can help investors mitigate losses during periods of stock market and economic uncertainty. Different asset classes and types of investments perform differently at different times and are based on different impacts of certain market conditions. This can help minimize overall portfolio losses. Absolutely, Urshad. So we do want to diversify. We don't want to put all of our eggs into one basket, do we? Right? So how do you ask investors that you want to show up on title instead of just investing in their company? That might not be an option. Let's see who asked that question. Zenny. We might not have the option of asking investors. You might not have the option of showing up on title. And that's where you now need to make this decision. Is this, and this is where our point number 2 gets tied in. How long have they been through this? Have they been through ups and downs before? If they have to hold that property longer, what is the strategy? are they still going to be able to pay you out? Are you still going to be able to get your initial capital back plus the interest that you were promised? These are the questions we need to know the answer to, because in most cases you're not going to be able to show up on title. And I want you guys to know that tonight the purpose of this is not to scare people away from investing. What this is actually to get you investing, to get you taking action, but to make sure that when you are doing that or where you are doing that is in the correct manner. Do you see what I'm saying? So am I saying don't invest in a company? No, absolutely not. I'm saying invest in a company. There's nothing wrong with that. Yes, it's less secure. Make sure we have some property investments as well, but invest in a company. There's nothing wrong with that. We can get some good returns. It's a good way to maybe maximize our RSPs, or it's maybe a good way to use some of the cash that we have and, maybe some short-term lens. It's a good way to do it. There's nothing wrong with that, but we need to do our research on who we're doing it with. What kind of experience do they have? Have they done this before? Have they bought this type of property before? Have they done this type of renovation before? All of these sorts of things. And what happens if the market doesn't increase? What happens if interest rates stay high? What happens if these are the questions we need to ask, guys, so that we have a plan B if things don't go right to plan. We have a plan C. We don't lose all of our money. Okay? Is a blessing to invest in Alberta for the last 10 years. Definitely learn how to navigate the down and flat market. Absolutely. That's what all of us Albertans have been doing here for quite some time. Starting in 2002, the ups have been great, but be prepared for the down or high interest rates. That's right, Karina. You can lose 100% if buying pre-construction units if unable to close. Yeah. Comment from YouTube. Exactly, guys. So this is the thing: is we want you to make good decisions. Okay, we still want you to move forward. We want you to take action, but make sure that you are very well aware of where you take action. You're very confident in the people you're investing with. They have a clear strategy. They have a plan A, B, C, and D. These are the things you need to know. Point number 3, guys, that I wanted to touch on tonight, and that is, and feel free, by the way, if you have any more questions as we're going through this, throw them in the chat. I will do my best to answer them for you. But point number 3 are, what are the fundamentals behind you getting your return? So here's what I mean by that. In order for you to get your return or your promised interest rate, your promised payout, to get it on time, does that particular investment, is it expecting the market to increase? That's a good question. What if the market doesn't increase? What if it goes down in value? Okay, so let me give you an example. We're going to buy a house for $100,000. We're going to put $20,000 in as a renovation, and we're expecting it to sell for $140,000. We're going to make 20 grand. Okay, I'm just using simple numbers. I know there's closing costs. I know all of that sort of stuff, but let's just say that that's what our plan is. Okay, buy it for 100 grand, put in 20. We're going to sell it for 140. We're going to make 20 grand. Well, what if the market goes down while we're doing that $20,000 renovation? What's plan B? What if the market stays even, but we don't find a buyer for 6 months because the market slows down? What's our plan C? Do you see where I'm going with this? Is that we need to know what fundamentals are behind actually getting our return. What is going to kind of ensure us to get that return? Now, this plays into whether we buy a property or whether we're investing in a company that is buying a property. This same thing goes to whether we're buying a stock or whether we're buying cryptocurrency or whether we're buying any type of investment, guys. The same philosophy applies. Is how do we expect that money to be returned to us? What is the fundamentals behind how that money is going to be returned to us? Can the people that we're investing with, can they explain that to us? Oh, we're going to get the money because We're going to hold it for 10 years, and the mortgage is going to be paid down X amount, and the rents we're planning to increase X amount, and we're expecting X amount of appreciation. Well, are all of those numbers very conservative, or are they pie in the sky type of numbers? This is where we determine whether this is a good investment or not, whether we're buying a piece of property or whether we're buying with a company. A question from Casey. What markets in Alberta have best vacancy rates? My friend struggles to keep his 2 places rented in Edmonton to the point he has to take less rent just to fill them. In Nanaimo, vacancy is near 0. That's interesting, Casey. I would say right now, the vacancy rate in Edmonton is significantly low. I don't know what the exact rate is. Of course, it would depend on where in Edmonton. It would depend on the type of property. It would depend on the condition of the property. It would depend on so many different things. We've seen investors significantly increase the value of their rent just by taking better pictures in the ads, by the way they answer the ads, by the way they filter the tenants. There's so many different factors involved that I wouldn't necessarily say your friend is struggling just because of the vacancy rate in Edmonton. It's probably because of something else that they're probably not doing correctly. Pat, the challenge is some of who appear to be the best in real estate investing are some of those struggling to pay back investors. Exactly. I agree with that 100%, Pat. And the thing about it is that those who appear to be doing good in real estate investment, this is the thing we have to ask. Are they doing good in real estate investment just because they've been in a market that has always gone up in value and they haven't seen a downturn yet? Just because somebody might be all over Facebook, or just because somebody might speak on a stage, or just because somebody appears to be successful, it's still our responsibility as an investor to do a little research into that person if we're putting our money into them, right? And this is what we teach when it comes to raising capital. This is what we've been teaching for years and years and years, guys. It's all about, how do you build your credibility? How do you prove your credibility? And that goes both ways, whether you're the investor investing in somebody or whether you're the person that is trying to raise capital. Credibility needs to be proven, and certain questions need to be asked. Some of the questions that we've been talking about tonight. Stephen, if it's in the Black Triangle of Edmonton, that will be a challenge. Yeah, so depending on the location, of course, for sure, of that property. Thanks, Jules, for sharing that link. So yeah, Sam actually has a lot of good, Sam Lee does our Mind Your Own Properties every single week, and many good episodes. And he has talked about this subject. So there you go. You got a recording that you can go and look at. Some other fundamentals, maybe the investment is relying on, let's say we're investing with somebody who was buying Airbnbs in British Columbia. Good strategy, right? Well, what happened? British Columbia changes the rules. Potentially that strategy is going to be difficult to employ. What's plan B? What's plan C? What's plan D? These are the things that we need to know. There's always got to be more than one plan, guys. And that's the key to any investment. And think about it, at least in real estate, or at least investing into a company that is buying real estate, at least you can have other plans. Let's say you put your money into a stock and it goes down. There is no plan B for you. You lost your money. Simple as that. At least you have options when it comes to this. And at least you are somewhat hedging your bet, because that company is hopefully buying real estate and doing it properly. But are we checking into it? Casey, I'm new to the group and we'll check it out. Thanks. Absolutely, Casey. That's right, Sharon. Sam is great. Awesome. Okay, guys. So what's the point? Let's recap what we've been talking about tonight, because There are people out there that have lost significant amounts of money because they invested in places where the returns have not been realized. And the whole point of tonight is not to say that's impossible to happen, because it can happen to anybody. But the point of tonight is to help us still realize that there are opportunities out there. There are ways to make money in this business, but also realize the difference between investing in real estate, actual property, and lending. There's a big difference between the two. Both can be very, very valuable tools in our toolbox. But if we were going on, it's the same thing. If we're going to buy a piece of property, do we need to analyze it properly? Do we need to understand the market? Do we need to understand the neighborhood it's in? Do we need to understand the type of property it is and what kind of tenant it's going to attract? Whether the rents are going up or down in that particular market? What the vacancy rates are like? We need to understand all of that sort of stuff if we're buying actual property. Well, the same thing when it comes to investing into a company, guys. And I think that a lot of people blindly, this person's famous. Excuse me, this person's famous or this person's well recognized. But we still need to do our research. We need to, just as much as we might research a property, we need to do a little bit of research on that investment as well, or the company that we're going to invest with. What is their reputation been like multiple years? Have they been around long enough to see things go sideways? What is their plan B, their plan C, their plan D if an investment doesn't go as planned? All of these sorts of things are the things that we as investors need to know if we're going to put our hard-earned money into something. Okay, that's the point of tonight. We still want you to take action, but we want you to do the proper research first. We want you to know that if you're going to invest somewhere, still know that nothing is guaranteed. Be okay with the fact that you might just get your capital back and no returns. Be okay with the fact that things could go sideways. And, usually the higher returns that are promised, the higher risk is involved. Just be aware of that. Maybe be okay taking a little bit less as far as interest is concerned, making a little bit less returns if our money is going to be safer. Maybe investing with a larger company, or maybe investing with one that has been around and seen several downturns, or maybe investing with somebody that has never lost a dime of their investors' money to this point, has a really good reputation. There's so many different things that we could talk about. Yes, sir, Shad. Bootcamp has covered a lot of these topics. Colin, when you work with good partners who pay on time every time, you don't have to worry. That certainly alleviates a lot of the worry, for sure. Is the partner or the person you're going to invest with, is that somebody that no matter what, even if things do go sideways, they're going to work their butt off to make sure that things still work out? They're going to put the effort in. They're not just going to give up. What kind of person are we investing with? That has a lot to do with it as well. So guys, that's what we wanted to talk about tonight. And we wanted to be here to answer your questions. We wanted to be here to just help to alleviate some of the concern out there and make sure that, just because things have gone sideways for a lot of people, I saw another news article last night about a large company that has been around since, I think, 2012. And they're not meeting their expectations and they're having to restructure. I mean, I've personally invested in companies that are doing the same thing. These things are happening. And why? Because maybe markets aren't doing what they're supposed to do. Interest rates are higher, expenses are higher. And so this is where we need to just make sure that we are doing what we can. We are diversifying our investment, but don't let this stop you from taking action. Don't let this stop you from investing in real estate. Don't let this stop you from having conversations with people that are raising capital. Don't let this stop you from doing any of those things and actually doing something, because if we put our head in the sand and do nothing, if we put our money in the couch, Because of inflation, we're losing money anyways. So let's get it working, but let's make sure we get it working smart. That's the point of our discussion tonight, guys. And I've heard it several times lately about people that are just ready to give up. And we don't want that to be you. Don't just give up. Okay? Things can be tough at times. There were several times back in 2008, 2009 where many of our properties were underwater. Many of our properties were negative cash flow. And, this is a story that I haven't told a lot of people, but one of the reasons I got my license as a realtor in 2008 was because we needed to make some money to cover some of the negative losses and cash flow that we were having at the time from the properties. But what's the point is we did something to make sure that we covered that negative so that we could stay in long enough so that the returns could be realized many years later. That's the key, guys, is that who are you investing with? With somebody that's going to give up? Or are you investing with somebody that's going to keep going, cover those losses, keep moving, make a solution, has a plan B, a plan C, a plan D? That's who you want to be investing with. All right, guys. Fritzy says, 100%, we can't be stuck in a negative experience. We have to push through it more sophisticated way and look for good opportunities. Absolutely. And there's good opportunities out there right now, guys. There are really good opportunities out there. I've decided to invest in a couple of opportunities right here in Alberta. And recently, why? Because the fundamentals make sense. Because the numbers make sense long term, even if we have a plan B and a plan C and a plan D, even if interest rates don't go down, even if values don't go up, even if all of these contingencies don't happen, we still have a way to make money. Those are the types of investments we want to be investing in. And I will just say that if any of you are looking for something like that, feel free to reach out. Just email us at info@investorlife.com. We do have some opportunities right now that we can show you and point you towards. But that's our message for tonight, guys. We just want you to be making good decisions, smart decisions, and have good people on your team, good people on your side. That'll make a big, big difference. Sean, I'm on the other side of this. Any advice for someone who is looking for help financially? So, Sean, I would probably need a little bit more information than that. I'm not sure on the other side what that really means, but someone who is looking for help financially, depends on what the help is. One of the things that we always suggest for people, when we first got started in real estate back in 2004, we didn't have the money to buy it. We didn't have the credit to buy it. We didn't have the knowledge at the time. So what did we do? Number one, we got the knowledge. We educated ourselves. So somebody who's struggling financially, the number one thing that I would say to start out with is educate yourself on financial strategies, educate yourself on real estate investing strategies, educate yourself on how to raise capital. Even if you don't have the money, if you don't have the credit, if you don't have the knowledge now, you can educate yourself on how to do those certain things. We ended up buying, it took us a year of education before we bought our first property, but we bought 100 plus after that. Did that change the trajectory of our life financially? Absolutely. So for somebody who's struggling financially, the number one piece of advice that I would give is educate yourself and start by buying a book. I've started with Rich Dad, Poor Dad. That was the book that I started with. But there's many out there, and I'm sure others have suggestions, but start educating yourself. Start showing up at our Tactical Tuesdays here. Start getting tips from other investors. Start asking questions within Fearless. Start making connections and networking and building relationships within this investing world. If you're struggling financially, these are the things that you need to do to get going. Urshad, be fearful when others are greedy and greedy when others are fearful. Absolutely. That's my first book too. I read that and I bought a mentorship. Good for you, Sean. That's where you start. And don't expect everything to just like immediately change. It takes time. But hopefully with your mentor, I'm not sure who that is, but hopefully with your mentor, you're able to stop struggling. Use and employ strategies that will help you in time. This is not a get rich quick thing, real estate investment, but in time, be able to not be struggling financially. Yeah, I've read that book many times. Absolutely. Who, Not How. That is one of my favorites as well, guys. Good one, Mike. I like that book too. That's what it comes down to, guys, is educating ourselves and learning and getting to know people. That's really what the key is. All right, that's it for tonight. Thanks for joining us, guys. Take action. This is Take Action April. Don't let the negative news around you that you're hearing, or negative posts, or even if you have personally lost some money, what's done might be done. What you need to plan now is what to do moving forward. And I know that's easy to say and difficult to do, but not doing anything isn't going to help. So make a plan. And if you need help making a plan, that's what we're here for. That's what our Ignited program is for. That's what our laser session we're going to be jumping into now is for, to help our members make plans so that they can get out of whatever situation they might be in, or they can raise the capital they need to raise, all of these sorts of things. That's what this is all about. Sean says, I have learned so much, but it hasn't changed much for me. It takes time, Sean. You're going to hear many, many investors. I mean, we joined in January of 2004. We bought our first property in June of 2005. I think that's what the timeline was. Anyways, it took us 18 months, let's say, before we bought our first property. But here's the thing. Did that change our life financially? No. When we bought our second, third, fourth, fifth property, did that change our life financially? No. Did it set up for the future to change our life financially? 5, 10, 15, 20 years down the road? Yes. That's the point of employing some of these strategies. Is long-term, you have the ability to change your future financially. So it takes time. All right. Thanks for sharing that link, guys. If any of you need help or looking for mentorship, yes, that's what our Ignited program is for. Feel free to book a call. I'll sit down with you. We will chat about what the program is all about and whether it's a fit for you or not. We usually know pretty quick whether it's a fit for you or not. And if you're looking for an investment opportunity, guys, feel free to reach out as well. We are able to vet opportunities and bring them to you. So that is something that we are really interested in doing and just getting started in doing. All right. Happy to have you here too, Mel. Awesome. Okay, that's it for tonight. We're going to see all of our Ignited members over in our laser session in about 10 minutes at the top of the hour. Thanks for joining us tonight, guys. Take action this month. This is Take Action April, and we want you to still move forward in your investing business one way or the other. Have a great night, everybody.